Welcome. In this video, is XCN coin rally coming? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the price movements in the chart, there are striking similarities between the structures that occurred in the past and the current price formations. In particular, a significant bullish wave observed in previous price movements, followed by a period of horizontal consolidation and then a strong, sharp, and voluminous rise, suggests that this structure may have the potential to repeat. When the current price chart is analyzed, a very similar scenario occurs, and this situation generates positive signals both technically and psychologically. When we take a closer look at this bullish pattern that has occurred in the past, we see that the price first initiated an upward movement by taking strength from an important support level. This movement lasted up to a certain resistance level and followed a horizontal course for a while. This sideways phase is usually the market's digestion of the previous rise. Investors watch the price, profit realizations occur, new buying opportunities are sought, and the supply-demand balance is prepared for a new direction. It was after this period, when the buyers regained control, that the price made a much harder and more effective upward move. When we look at today's chart structure, the possibility of a similar structure is quite strong. Because at the moment, similar to the previous structure, the price first gained an upward momentum, then entered a flattening process and started to consolidate in this horizontal zone for a while. This suggests that buyers are still strong in the market and that the price has entered the phase of digesting the rise. It is common in the technical analysis literature that at the end of such sideways movements, strong buying usually resumes. The bullish momentum is renewed, and the market makes an upward breakout. Such similarities are of great importance not only in a graphical sense, but also in terms of market psychology. Because when investors realize that a certain structure has worked before, that a certain movement has paid off while that structure is forming, they prefer to take a position in the same direction in the repetition of similar structures. This can cause the structures formed on the chart to actually become self-fulfilling prophecies. The likelihood that the current horizontal process will end in a similar way is therefore a very strong possibility. The horizontal price movement observed at the moment can be considered not only as a stagnation, but also as a preparatory process. Because most of the time, such sideways movements are the forerunners of a big price explosion. In other words, the market is actually experiencing a period of calm before the storm. During these periods, big investors, which we call smart money, secretly collect their positions. The volume may remain low, but the price manages to hold in a zone. With the subsequent breakout, buy trades are triggered and the price moves rapidly upwards. The current chart structure seems to fit this scenario quite well. In addition, the stability of the price in this horizontal zone is also a very remarkable and positive development. Because support levels were strongly defended while being tested, downward sags were recovered in a short time, and seller pressure remained quite limited. This indicates that buyers have not yet withdrawn from the market, but are preparing for higher levels. If the price, which is technically stuck in this zone, breaks to the upside, it may start a much harder bullish wave. Just like in the past, this horizontal channel that the price is currently in is actually a very strategic area where buying opportunities can occur. Because investors know that such structures have broken upwards in the past, they tend to accumulate in this region. As soon as the price breaks upwards from here, both technical indicators and investor psychology can come into play, causing the price to accelerate upwards quickly. When evaluated in the light of all these technical data, it is seen that there is a remarkable parallelism between the structure of the price in the past and its current structure. In other words, the chart structure, which previously progressed in the form of a bullish, horizontal bullish, is now preparing to repeat itself in a similar way. But we can't decide on the analysis only with this. Let's look at the other metrics. Keep watching. Looking at the chart from a broader perspective, it can be seen that a very noticeable and structurally strong ascending channel pattern is forming. In technical analysis, such patterns are generally considered to be an indication of a healthy continuation of uptrends. Ascending channel patterns imply that the price is moving in an upward sloping manner between a certain lower support and upper resistance. This type of structure indicates that buyers are strongly present in the market, and the price is heading upwards in a controlled, steady manner. At the moment, the price is moving in a very regular and balanced manner within this ascending channel. In particular, the lower band of the channel is acting as a strong support zone, reacting upwards every time the price approaches this level. This shows that the market has a strong buying reaction at the lows, that buyers are still active in the market, and that the price is unlikely to move down easily. This is a reassuring signal for long-term investors. In the current situation, we see that the price is approaching exactly the middle band of the channel and is starting to push this zone. The mid-band is a very important zone in the ascending channel structure because crossing this level usually signals that the next target will be the upper band of the channel. An upside break of the middle band means that the market is gaining upward momentum. Buyers are getting stronger, and the price is targeting new highs. If this happens, it is quite likely that the price will move strongly and steadily towards the upper boundary of the channel. From a technical point of view, the fact that the price is trying to hold on to this mid-band region sets the stage for a strong momentum. This is because investors' attention is usually quite intense in such areas, and whether this level can be crossed or not will be decisive for many in terms of buying or selling decisions. In the current price structure, it is clear that buyers are trying to take control and are making a serious effort to break the middle band. Especially if an upward close comes from this region, this will most likely herald a new bullish wave. One of the most striking elements of this technical structure is that the price's movement within the channel is quite clean and harmonious. This means that when the price approaches the lower band of the channel, it is met with a buying reaction. When it reaches the middle band, it generates upward pressure as volume increases. And if this pressure is strong enough, it can move all the way to the upper band of the channel. This cycle of movement increases traders' confidence in the technical structure and makes it easier for them to base their trading strategies on it. Since ascending channel patterns are usually indicative of strong and sustainable trends, it is advantageous for traders to be in this structure. This is because within such a channel, the price offers a buying opportunity every time it makes a bottom and profit-taking every time it approaches a peak. At the moment, a similar window of opportunity is about to open. If the price breaks the middle band upwards, this breakout will act as a trigger and cause the price to accelerate towards the upper region of the channel. Moreover, this technical structure is supported not only by price but also by volume analysis. Recently, there has been a noticeable increase in trading volumes as the price approaches the mid-band, indicating that new buyers have entered the market and there is an expectation of a breakout from this level. This is considered a very positive signal in technical analysis because a breakout with volume support is usually stronger and more permanent. This ensures that the upward movement of the price proceeds in a healthier way. When we look at the MACD indicator, the recent outlook of this indicator, which offers extremely important clues about the direction and strength of the trend, especially in technical analysis, paints a promising picture for investors. In particular, the fact that the MACD line started to move upwards by attacking above the zero level indicates that a positive momentum is building in the market and buyers are starting to gain weight. The MACD is an indicator formed by the divergence and convergence of two moving averages, and is frequently followed for its potential to foretell changes in the direction of the trend. The zero level is an equilibrium point for this indicator. When the MACD lines are below this level, the market generally presents a negative outlook, because the short-term average is below the long-term average. However, when the MACD lines cross above the zero level, this indicates that the short-term trend has now overtaken the long-term trend, and buying pressure is gaining weight. This is considered a strong signal that the market may have turned upwards. In the current outlook, when the MACD lines rise above the zero level and this movement gains momentum, it means that the price will rise. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risk correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.